The market is going to keep going up. Joining us is Larry Levin, president of Traders Advantage. Larry, great to see you this morning. Let's talk about the start to the year that the S&P 500 is having. Did you anticipate this kind of strength?
No, I'll be honest. I thought that there would be a little bit of a sell-off after the first year. Obviously, the market finished strong, right, sitting on the highs at the end of the year, and now we're sitting on even higher highs, a couple of weeks into it. Obviously, there's only been about 10 or 11 trading days, so it hasn't been a whole lot this year. But I think a lot of traders down here would have thought there would be a little bit of a sell-off as people waited for the year-end to, get rid of the tax implications, put those off for another, 12, 14 months or so. But we really didn't see that. The markets have been strong, and they've fought off a lot, that's for sure.
I guess the big question is, how sustainable is it? We've had a good run, as you said. Bloomberg saying the best start to the year in 25 years. Another trader told me 25 years ago was 1987, and we started off pretty good then as well. How sustainable is this rally?
That's a little bit of a scary comparison, that's for sure. But I think the issue is that the rally is sustainable, and the reason, unfortunately, is not good or necessarily good or great economic conditions, but it really is something, the three of us have talked about many times on your show before. It's government backstopping, and really a situation where, regardless of what happens, the government's going to step in and try and support the markets, the economy. Their job is to support the economy, but it's not their job to support the markets. But that continues to happen, and that's certainly, in my opinion, the reason that these markets, again, fight off so much. When there is a decent amount of bad news out there, the markets, again, keep going up, have for the last several months.
So, Larry, how do you trade this market? You trade S&P 500 futures. Are you buying on weakness, or are you selling in the short term when you see a market rally and then anticipating perhaps a little bit of a sell-off and you get back in? How do you do it?
Well, you definitely try and buy on weakness. You don't want to sell short, the S&Ps or the stock indexes, in my opinion. You would have got your head handed to you if you tried to do that over the last 2 or 3 months. So you really have to try and be long. How do you do that? It's exactly what you said. You've got to try and buy on weakness. The only issue is you haven't seen a whole lot of weakness. You look for economic data that, is bad and may push the markets down at least temporarily, whether it's a couple hours or even a couple days, depending on your time frame, and you want to step in and you want to buy in that situation. You haven't seen a whole lot of that. In fact, for the most part, you come in almost every day and the Dow's up 50 to 100 points. The S&P's up 5, 10, 15 points. And so you're forced to either buy at the highs, take a chance that the market's going to keep going higher, or sit out that trade. You haven't had a lot of great opportunities.
How important is, or are you watching the volatility index, the VIX? It's been hanging around about 20, a little bit above 20, sort of back to where we were last spring, although we did get down to 15 on that index. Do you think there's the possibility for volatility to keep edging down to maybe that mid-teens level?
Yeah, I think as long as the market keeps going up and, again, there aren't any real great signs of it doing anything but kind of staying stagnant to moving higher, you will certainly see the VIX, move lower, maybe even to that even below 15, because as the markets move up on this slow, steady climb that's not very exciting and not a great trade, the VIX tends to move down. When the markets drop a whole bunch on some bad, unknown news, that's when you see the VIX jump up to the 25s and 30s. It's really on usually bad news when the VIX goes up, usually not on good news, because the good news, obviously, or I shouldn't say good news, up movements in the market is what drives the VIX down. It would be the opposite. Down movements in the market would drive the VIX.
One of the other interesting issues out there is the level of activity. We've certainly popped back off of the lows in terms of volume that we experienced during the Christmas period. That's pretty normal. But the average volume has continued to trend down. Is that a concern for a trader like you?
Absolutely. Any professional traders, we want volume. We need volume for the markets to be busy. And the VIX higher is much better for a floor trader or a professional trader, and certainly a lot of your viewers who are active traders, they want the VIX and the volume to be up, not down, because that's where the opportunities are. Now, that goes right along with the risk, and again, your viewers and even professional traders have to pay close attention to that risk. It jumps up when the volume jumps up, but so does the opportunities. So when there's no opportunities or low opportunities because that volume is low, it's not very fun for a trader, and it doesn't make for great opportunities, to make money in the markets. You want the markets to be moving around quite a bit, and unfortunately, that usually happens when very bad or surprising news happens. It doesn't happen because the market flies up on good news. Going up lately has not been a very exciting trade.
All right, Larry, great to hear from you this morning. Thanks for joining us.
Thank you.
Larry Levin, president of Traders Advantage. Now.